It's a strike price of gold at 15,000.
Oh, it's on gold. Okay.
Yeah, yeah.
I thought silver. Yeah, okay. That was
No,
confusing.
yeah, this is gold. So
Someone thinks we could get to $15,000 by what's that maturity?
sometime in November. Yeah, the third. It's the
Yeah.
third. Yeah, but the other thing as well, Clive, someone expects a sharp move higher because let's say we move from like around 5,000 where we're now to like 6.5 in a matter of weeks. You could see these prices really jump. Even the 15 and 20,000 calls. So they want exposure to what the options traders call gamma, where the price moves even though it's not near the money. If it moves sharply higher, gold, and there's still a lot of time, these options could double in value, and they just get out.
Gold markets are buzzing as traders eye high-risk, high-reward options, according to Mario Innicco and Clive Thompson. Recent conversations highlight a gold strike price at $15,000 with a November 3rd maturity, creating explosive potential for $15,000 and $20,000 call options. Options traders are targeting gamma exposure, seeking profits even when the options are far out of the money, banking on rapid upward moves. With ample time before expiration, these positions could double in value, providing strategic opportunities for savvy gold investors tracking market volatility. Now, we present the clips from theirs interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Well, this is the gold options on Comex, and this is the December 2026, so it expires probably sometime in November this year. And if you scroll down here, and this is the open interest, if you scroll down, oh, these are puts now. So there you go. The 15,000 calls, Clive, the open interest is over 8,300, which is huge. That's, you multiply that by 100 ounces. And I think yesterday that call traded for $15. So it's like over almost $15 million someone is willing to pay for a 15,000 call. And also the 20,000 call, the open interest is almost as much. And I think it traded yesterday for almost $10. So you do 10 times 7,800 times 100, which is 100 ounces per contract. And someone is spending roughly almost $8 million buying these calls.
I think you say $15,000 call. Is that $150 or how does that work? Why is it 15,000?
Strike. It's a strike price of gold at 15,000.
Oh, it's on gold. Okay.
Yeah, yeah.
I thought silver. Yeah, okay. That was
No,
confusing.
yeah. This is gold.
Someone thinks we could get to $15,000 by what's that maturity?
Sometime in November. Yeah, the third. It's the third. Yeah, but the other thing as well, Clive, someone expects a sharp move higher because let's say we move from like around 5,000 where we're now to like 6.5 in a matter of weeks. You could see these prices really jump. Even the 15 and 20,000 calls. So they want exposure to what the options traders call gamma, where the price moves even though it's not near the money. If it moves sharply higher, gold, and there's still a lot of time, these options could double in value, and they just get out. But it's a risky thing, of course, because if gold doesn't do anything very sharply, they will become worthless. But like you said, maybe someone does expect something to happen, some kind of revaluation like we've spoken about.
I would have thought these options were fairly cheap to buy. I don't know what it would cost to buy
Well,
an
let's have a
option which
look.
is so far out of the money.
We got the quotes here. We got the right month. This is March.
Gold options on Comex are drawing major attention, as highlighted by Mario Innicco and Clive Thompson. December 2026 gold calls, including the $15,000 and $20,000 strikes, show massive open interest, over 8,300 contracts for the $15,000 call alone, equating to millions of dollars in potential exposure. Traders are targeting gamma, betting on sharp price movements from current levels near $5,000 to $6,500 in a short period. These far out of the money calls could double in value if gold surges before November expiration, though they risk becoming worthless if the rally doesn't materialize. High risk, high reward strategies are fueling speculative gold trading excitement. Let's get back to the interview.
New York Fed member back in the 70s, he wrote about the fiat dollar being I owe you nothings. And he said we had a system, it was the Bretton Woods system, and then we abandoned it. So we have a non-system. But anyway, Ray Dalio thinks this system is on its last legs. And he thinks gold and I think silver is going to come back as well.
We're at 5 minutes to midnight when it comes to the world's financial system, at least the post-71 financial system. I don't think that it's possible for government debts to continue to escalate at the rate they're going without something going terribly wrong.
Yeah, and unless, maybe, unless they revalue gold, the U.S., and then that will cushion their debt load. But you can't keep doing that, or else, what the underlying Clive reason for the problems is too much government spending, I think, and too much money printing.
Yeah, it's at the end of the day, as the government borrows money, it gets poorer, and someone somewhere gets that money, and they're going to put that money they get into some sort of asset. They're not going to leave it sitting in cash forever. They might leave it for a month or two while they try and second guess where the market's going. But at some point, they're going to say, I'm not going to stay in a depreciating asset for the next 30 years because it will buy me nothing. So they're going to move into property or equities or Bitcoin or gold or silver or whatever takes their fancy at the time. Might be collectibles.
Yeah, I listened briefly to President Trump was interviewed the other day about the economy and the debt. And he said, what we want to do is grow the economy enough to make the debt smaller. And yes, US GDP is like 4%. But a lot of that is to do with AI, isn't it? I mean, AI is contributing massively to GDP. I think we saw some employment numbers yesterday that were really weak in the US. And today, they're not publishing the non-farm payroll. Their excuse is that the government was shut for a while and they couldn't compile the data. But maybe it's a really bad number and they decided to give that excuse. But do you think they'll be able to grow out of the debt like President Trump and maybe Besant think they can?
Well, there's a plausible story that we will move into a world where effectively all businesses are run by artificial intelligence, and we can all sit at home watching Netflix with a universal basic income. Meanwhile, the economy continues to grow due to these intelligent machines. It's a wonderful world to look forward to, but it's going to come slowly, if it comes at all. But yes, I do sincerely believe that we are in a situation where artificial intelligence, we've got two things going on. One, we've got the money changing hands in the AI sector, and we're talking about mega amounts of money changing hands from one company to the other, creating sales and profits left, right, and center. And that's the incestuous behavior I was talking about earlier. So that is boosting GDP on the one hand. And then the other aspect, of course, is we've got the ongoing benefits of companies becoming more and more efficient. That'll be a very slow process, but over time, some employees in most companies will become faster workers or more efficient than they were before, and that's got to, at the end of the day, boost output.
Yeah, and they'll be able to do more, and they'll have more time to do other things as well if, a certain task doesn't take as long because AI helps. So anyway, Clive, any interesting videos on your channel that you want to tell the viewers about?
I'm working on it's not out yet, but it'll be out within 2 weeks, so people can keep tuned to that. I'm working on an educational series for children, where children will, through a children's story idea with lots of children's pictures, will learn about words like inflation, what is a loan, what is to borrow, what is to lend, what's interest, what does it mean to get, what's the word getting fired is, what is a landlord, what is rent,
Oh,
what is a tenant. So keywords for children who are not learning these words in school. It's going to be targeted at kind of 8-9-year-olds, but it'll be great fun for the adults because I'll be bringing in the names of some important people like Mr. Elephant Tusk, who runs the car factory, or Geronimo Powell, Geronimo Prowl, the owl, who runs the meddlesome reserve bank in Toy Town. So there'll be a little bit of fun for the adults too.
Financial experts Mario Innicco and Clive Thompson warn that the post-1971 fiat dollar system is under severe strain. With government debt soaring and money printing unchecked, gold and silver are positioned for a potential comeback, echoing Ray Dalio's predictions. Investors are likely to move from cash into assets like property, Bitcoin, or precious metals as currency depreciates, but employment and real economic growth may lag. Thompson is also developing a children's educational series explaining finance fundamentals, covering concepts like inflation, interest, borrowing, and rent, using engaging stories and characters to make economics accessible to young audiences. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.